Hey guys, today is Wednesday, December the 6th of 2023, and I want to go over the US dollar DXY. So without any further delay, let's get into it. So this is the weekly chart of the US dollar. I'm using data from like 2001, you could say maybe 2000, June, all the way to current prices, and using cycle spectrum analysis. There is one cycle here that is very dominant and strong, and you know what that one is? I'm sure you already know if you follow my channel. The 180 cycle on the US dollar. As you can see, this is how it's been playing out. And so far, this cycle is down all the way. And this is going to fluctuate because this is always changing, this dynamic. As of right now, this one is showing, indicating somewhere around October or September the 30th of 2024, this cycle hits a trough and then it goes up. So far, the weekly is down using the 180 cycle. So let's look at the daily chart to see what we could extract from there. Okay, this is the daily chart, and I'm using data from roughly around 2016, the current prices. And the important cycle here is the 322 cycle here. As you can see, if we slide this over, you can see that we're about to hit a peak somewhere around, you could say roughly December 17th. We hit a peak, and then this cycle is going to be pointing down. So on from December 17, 16, or that week, this is pointing down. This is going to be in sync with the daily. And if this is going to play out, we don't know yet, then that means gold, silver, and other commodities that go inverse the dollar, if this plays out, are going to go higher. So this is what you're trying to, bet on or have some kind of idea if this is going to play out using probability. That if it's going to go down, we got to take out that low, and everything inverse should probably trend higher. So let's look at some seasonality and see what we could extract from there on the US dollar. Okay, so this is the seasonality chart. You can see using the 5-year, December is very weak, very, very weak. And you know that the daily cycle is going to be peaking, and it's going to be hitting a top somewhere around December 16 and 17, and then it should be going down in sync with the weekly. So you got to keep that in mind. And you can see that January is strong and February is strong. So once December is over, it looks like it gets a nice little bump within the 5-year seasonality average. If we push this to 10 years, you can see that December is still weak, and January and February are pretty strong. So always remember that December is weak, January, February are strong. We go to 15-year, you can see that December is weak, which, we already December 6th, so we're still early in the game. This could start, really pushing lower, meaning that silver and gold and all the inverse could be, getting some Momo to the upside. That's December week, January, February strong. And December 20-year, you can see that December's still weak, and January and February are still strong. If this plays out, it's going to be in sync with the weekly, the cycle of the weekly and the daily. Once, December 16, 17 kicks in, this December, if it plays out, could be a nice, money maker, shorting the dollar, or going long the inverse currencies like the euro, and going gold, going long gold, silver, and whatever you think that when the dollar goes down, they go up, the inverse. So I'll leave that up to you, but that's what seasonality is showing, and could be a good trade going into the next year. I also like to see the commitments of trader report. I took out small, retail. Normally I like to see non-commercial and commercial. So pretty much large speculators and commercial. And you can see that commercial is black. And they were flat all the way from October 9th to November 20th. and this is their latest. So they're starting to accumulate buying. I was expecting them at least, if it was dollar was gonna go down, at least to get down to minus 28, but they never got there. The lowest was probably minus 20, and now they're bumping up. They're buying. Interesting. They are buying, and large speculators are. They were, kind of flat, and they're not selling that much. It's 19. It didn't really take out the low of 18 right here. So commercial are a little more aggressive. Hedging here, but we got to see how this is going to play out. But I figure I'll let you know what's cooking over here. As you can see, the dollar pulled back, and they started to buy, meaning that maybe the dollar could continue pushing lower, and they're hedging. That's what it seems to me. And large speculators, as the dollar has been going down, they haven't even been selling, which is interesting. They're just holding their position there, thinking that the dollar is going to go higher. But that's what the Commitments of Traders report is showing right now. So there's another seasonality chart I like to look at, and you can see that this is where the dollar put a low around November 28th and just kind of chucking sideways to December 6th, putting this little nice high. So looking at the 5-year average, it gets a little toppy here between December 5th, 6th, then from here it kind of goes sideways and then dips even lower, meaning that if you're long gold or silver or copper or thinking about it, maybe from here on out that could play out. Using the 10-year, it kind of goes sideways and it still gets like a nice little bump around December 18th, 21st. The daily cycle around December 16th, 17th, that daily cycle hits a peak. So the 10-year here kind of hits a peak. Then it really, from December 21st, then it starts going down. If we get our 5-year average, you can see that it's just kind of sideways. It starts dipping in somewhere around December 27th, but really just kind of chop from here. It doesn't really, which also could play out. We're kind of hovering around the 50% of the daily, which I'll be showing you on some of the future charts. But this is what the seasonality is showing. So whichever this one's going to play, like the 5-year looks like it dips lower, and the 10-year kind of goes sideways. A lot of chop within the 15-year. So this is the the monthly chart of the dollar, and I have this whole area right here as support, and we're just kind of chopping around the top part of it. As of right now, we're at 103.87. This is the mark of the new year. Let's look at and we're still in buy mode on the dollar. If we look at the weekly, we almost took out and made a sell signal. We have a buy signal on the dollar since September 11th, 9/11. Ooh, interesting, 9/11. And then we kind of made a top somewhere around October 2nd and just kind of went chopping until October 30th of that week and then kind of pulled back. But still no sell signal yet. Got this nice little pop. Maybe it's going to test this high up here to see if it could, push higher. But if it fails here, it could go down. But we don't know if that's going to play out. We know, it could go up to December 16, 17, 18 and do that and then really fail. And if it does that and is in sync with the daily and the weekly, in conjunction with those two time frames, then maybe the gold and silver could pull back really good, and maybe that's a good opportunity to load up the truck again and ride gold, silver, and the inverse currencies higher and the dollar sell off into December, and equities and everything else, the Christmas rally all playing out. But, I'm just speculating. I'm not saying that's going to happen, but I have it in the back of my mind. Let's look at if we switch to Heikin Ashi. I know it's a little more riskier. Yeah, we haven't even kissed it yet. We haven't even kissed it yet. It's not actually more riskier. It's more, you're taking more risk. Here, you would have been stopped out if you were long, but it's still holding on, and I still have a target of 98. So maybe we'll get down there, but as of right now, it hasn't been playing out. Looking at the daily, so far, the daily issue a sell signal on November 3rd. And if you were following this indicator, so far, you're making money if you're short the dollar or go long, the inverse instruments. In order to get stopped out, your stop should be at 104.54. We put the Hekanashi, so this is a little more. Your stop will be somewhere around 105.10, so you're having more risk here. And I think the short was November 15th, so it was a little later. But if you don't want a lot of risk, then you put the regular candle, and you would have been short November 3rd, and that's your line in the sand. And we dipped in here, and now we're popping up, but we're kind of going sideways here. So if we don't take that out and kind of go sideways here, December 16, 17, and then pull back, then you can still write this thing down. All right, let's go to the next clip. Might be our last clip here before we end this video. All right, 2 more clips, and then we'll end the dollar analysis. As you can see, market profile, point of control on the monthlies around 102.99, and it's kind of finding support there. See the cloud right here gives you this nice little strong level, 102.26. Keep an eye on that. MACD is negative. And on the, and you're below the 20 SMA on the monthly. On the weekly, you can see that you had a PPS sell signal around October 30th. You have a TON-D mark, TD9, that kicked in on 10/2, October 2nd. So the good indicator is telling us for a possible swing high, and this one was the best one, and then PPS kicked in and told you should go short after a nice little retrace, and then right there you would have slammed it or go long gold or whatever from right here. And we've pierced here. We're in the cloud, so it's a little volatile once you get it here. It's going to get erratic and wild until we either get out of the cloud or break above. And we're kind of chopping around this point of control, 103.45. And looks like the MACD wants to go positive, but it hasn't done that yet. And the linear regression channels are pointing up. You're kind of hovering around this channel here, but then if you really wanted to go long, this is probably the area to be thinking about it. But you got a lot of things against you. You got the seasonality in December being weak. You got the weekly cycles are down. You got the daily that's going to peak around December 16, 17. So I don't know. Maybe if you want to go long the dollar, maybe January, February would probably be better. And maybe that's where you could kind of, lock in profits with gold and silver and the euro, the currencies, whatever. But, that's just me thinking out loud. You're below the 20, kind of chopping around the 50 SMA and the 100, which is this gray one right here, above the 200. So the trend is still up, but short time frame, you can see that you're below the cloud. So it's a little weak. Kissing the 20 SMA, you got the 50 here, could be a possible target. Got this linear regression channel that if it still wants to chuck along, to December 16, 17, you got this little strong level here of resistance around 105. So there's a lot of things. You got one even building up right here in the cloud, which is 104.91, and the value area low. What is this time frame? 3 months. Yep. So this was your point of control. This is the value area low. So you could kind of, steep up here, but then maybe turn around and fail. You can see the MACD is positive, and it looks like this wants to get positive. So maybe you could kind of get a nice little bump into maybe next week, and then maybe pull back. But that, it's all speculation. Let's look at our midpoint chart, and I think this is where we're going to end it. So key level, I've been stomping the ground or hitting the hammer. 104.70, line in the sand for the yearly midpoint, which is right here. Could be possible we hit that and then go back. Very possible. Also 104.79, that's the monthly midpoint. You got a pivot here. This is the main one. This is the line in the sand. If it could get up here, 104.79, then it has a fighting chance to test the 114 or this level around here, 105. But if it can get above there and it fails, then that could be a good entry for the metals and the inverses. But this is what you want to keep an eye on, 104.79. On the weekly, you're above this week. You need to stay above at least 103.10 to kind of get the momentum, you know, maybe zigzagging here and then continue pushing higher. And this is going to fluctuate because we don't know what the close is for this week. So far, this is the line in the sand. And if you're going to push higher, you got this target right here of 104.34. And then you get to here, which is the midpoint on the monthly. And right now it's chopping around on the 104.10. But I'm not focused on this because this is just daily. This is going to fluctuate. But these are the most important ones here, these three. So let's see how the dollar's going to play out. But I can see it kind of maybe continue grinding higher and then maybe pull back if the seasonalities and all the cycles are going to affect it. So that's it for today for me. Hopefully you like this video. I'll keep you posted on my thoughts on the US dollar.